What if I told you there's an Indian company that quietly sells its products to over 160 countries, competes with global giants, and holds a 5 to 6% share of the world's specialty tire market? Today we're doing a full professional deep dive into Balkrishna Industries, also known as BKT, covering its financials, management, growth story, risks, and whether the stock is worth buying right now. Stay with us. Balkrishna Industries started its off-highway tire business in 1987 and has since become one of the world's most respected specialty tire manufacturers. BKT makes tires for agriculture, construction, mining, earthmoving, ports, and turf. Over 3,200 unique products. With 5 manufacturing plants in India and exports forming nearly 90% of its revenue, BKT is truly a global enterprise built from India. Europe and the United States are its biggest markets. Now let's get into the numbers, because this is where things get really interesting. BKT's trailing 12-month revenue stands at approximately 10,743 crore rupees, with a net profit of 1,112 crores. However, the most recent quarter tells a more cautious story. Net profit fell nearly 15% year-on-year to 382 crores, even as sales grew 7% to 2,737 crores. Operating margins have compressed from 25.4% in March 2024 to 21.4% by September 2025, a drop of over 400 basis points. PAT margins fell from 18% to just 11%. These are pressure signals every investor must watch. But here's what makes BKT stand out from its peers. Its return on equity of 15.9% is the highest in the tire sector, well above MRF's 8.8%, Apollo's 9%, and Seat's 10.4%. The balance sheet is fortress-like, debt to equity of just 0.22, interest coverage of 64 times, and long-term debt reduced by 44% in FY25 alone. This is a company that manages its money extremely well. Good financials mean little without great management. BKT is led by Executive Chairman and MD Arvind Kumar Poddar, backed by a stable, experienced team. Promoters hold 58.29% of the company with zero pledging, a strong signal of confidence. Institutional participation is exceptional, with 469 foreign institutional investors and 26 mutual fund schemes invested. In a significant vote of confidence, HDFC Mutual Fund raised its stake to over 9% in early 2026, up from just 7% in July 2025. Management has also proven its capital discipline. The 3,500 crore rupee capex plan is being funded through internal cash flows, not debt. That's rare and commendable. So what does the future hold? BKT has laid out an ambitious growth blueprint. The company is targeting revenue of 23,000 crore rupees by 2030, more than double its current revenue, with capacity expansion targeting 425,000 metric tons per annum. But the bigger game changer is the entry into completely new segments. BKT is piloting commercial vehicle radial tires in the fourth quarter of FY26 and premium passenger car radials by the third quarter of FY27. This is a strategic pivot from a niche OHT player into the mainstream tire market. Massive addressable opportunity, but also a major shift in competitive dynamics. On top of that, BKT is commissioning a new carbon black manufacturing line with 265,000 metric tons per annum capacity for external sale, creating a new revenue stream and reducing raw material vulnerability. Domestically, India now contributes 35% of volumes and grew 14.4% year-on-year. A powerful buffer against global softness. And the deferral of Europe's deforestation regulation to January 2027 gives BKT a one-year compliance breather in its biggest market. Now for the risks. And a professional investor never skips this section. First, export concentration. 90% of BKT's revenue comes from exports, making it highly vulnerable to global cycles, currency swings, and geopolitical disruptions. Second, European demand remains soft. Geopolitical uncertainties continue to weigh on BKT's largest market. Third, US tariffs are a live threat, and BKT has already absorbed foreign exchange losses of 117 crore rupees in the first 9 months of FY26. Fourth, raw material risk. Rubber and oil derivatives form nearly 60% of costs, and hedging covers only the short term. Fifth, Chinese competition in mid-range OHT is intensifying on price. And sixth, BKT is entering CV and passenger car tires, segments dominated by giants like MRF, Apollo, and global players. Execution risk here is real, and investors must monitor this closely. So is the stock cheap or expensive? At a PE of 31.25 times, BKT trades at a 9% premium to its peer median. The stock's 52-week range is 2,098 rupees to 2,117 rupees, with a market cap of around 41,000 crore rupees. It trades at 4.45 times book value, the highest premium in the tire sector. Analyst views are split. Nuvama has a buy with a target of 3,100. Nomura upgraded to buy targeting 3,242. But Nirmal Bang has initiated a sell with a target of 2,418. The divergence tells you this is genuinely a debated stock right now, not a clear, easy buy. So here's the bottom line. Balkrishna Industries is a world-class niche business, a rare Indian company with genuine global pricing power. The balance sheet is clean, management is aligned, and the 2030 growth roadmap is credible. But the stock isn't cheap, margins are under pressure, and near-term headwinds from tariffs, European slowdown, and capex absorption are real. This is a high-quality compounder going through a speed bump, not a structural breakdown. For long-term investors, any meaningful correction could be an excellent entry point. For short-term traders, patience is the watchword. If you found this analysis valuable, don't forget to like, share, and subscribe. Drop your thoughts on BKT in the comments below. We'd love to hear from you. Until next time, invest smart, stay informed.